All right, welcome back to this week's breakout watch list from September 5th to the 8th. Now this is a shortened trading week. Monday is closed for Labor Day, so we only have 4 days of trading. So in today's video, I'll be covering the top 10 swing trading setups from the long side going into next week. Each of these stocks either have strong fundamentals, strong technicals, or volume clues that lead to uptrends. And this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks I'll be covering in today's video. While I was going through my weekend routine, I found two themes going on in the market. One technical and one industry-wide. The technical theme is with many stocks reporting earnings last week, we have a handful of stocks moving from stage 1 bases to stage 2 uptrends. And the industry theme was many oil and gas stocks were picking up accumulation bars last week. So with those two themes in mind, let's jump to MarketSmith and start breaking down these setups. The first stock that we'll cover today is AFRM, and historically I've used many of these rallies to short into as it continues to work out at stage 1 base. But one thing that we're seeing last week and a change in character is the volume coming in. So last week we had earnings, or maybe last Friday, the week before, but on the 25th we had earnings, and earnings were still negative. Sales were up 22%. After-tax profit margins were still negative, but it's not the numbers that are coming out, it's the reaction to the numbers, and the reaction was very positive. AFRM was up almost 29% on 600% the average daily volume, closing right near the high of the day and back through the 8, the 21, the 50-day moving average, and was already trading above the 200-day moving average, which has gone flat and is now turning up. After that first day, we had a little consolidation day on day 2, the 28th, so that was Monday last week, before really ripping higher. And the market, that was strong last week as well, but we saw very strong closing ranges in each of the days. Pair that with the large accumulation volume, well above average on all 5 of those trading days. This is a stock that has that character change. Now, if you just draw a line right through $20, we're back through that. We closed at $21.86 last week. If the market comes under any pressure, and the market did run up pretty quickly, what I'll be looking for is a pullback and hold into this $20 level. I don't really want to chase this up here at $22, kind of 10% away from my ideal entry point. So I'm waiting for a pullback into $20, allow that 8-day EMA to catch up, and then we can manage our risk against that level for AFRM. One of the stocks moving from stage 1 base into a stage 2 uptrend. Another stock that I think has frustrated most traders out there is ARRY. This is a solar stock, and while the group isn't very strong, personally I'm short SEDG right now, going to a weekly chart on this, you can see that this is a stock that had that really nice flush in June of 2022, rallied back up, and because it rallied so strong in the weak market of 2022, this was a stock that was on probably every swing trader's watch list. As it comes up to this 25 level, fails, comes up to the 25, fails, fails, fails. And now we're back up to that 25 level. We have earnings coming out a couple weeks ago where we popped back through the 50 and the 200-day moving average. We did so with earnings up 422%, sales up 21%, after-tax profit margins up 17%. But in typical ARRY fashion, we rally up to that resistance area, immediately fail and pull back to the 50 and the 200-day, which also you have the 8 and the 21 right there. Consolidated there, and instead of just coming back into the lower part of this zone, it rallied right back up. So now we're starting to see volatility compress a little bit. We actually got through the 25 level on Thursday, tried it again on Friday, closed slightly under 24.95. But this is a stock that after it's frustrated everyone for about a year, we're going to talk about IoT later, very similar. This is one that if we can hold this $25 area, say we open above it, if we can hold that $25 area on a pullback in the market, that's the character change like AFRM just went through that I'll be keeping a very close eye on. Again, solar is not really the theme that I want to be focusing on, but this is a stock that when it does go, because it's frustrated people for over a year now, and we take out this $25 level, a close over that's going to be significant for me. Next, we have a biotech stock, BBIO. This wasn't on the watch list last week because I didn't make a video last week. I was traveling, but this was a stock that I was watching coming into the week. Don't have a position in it just yet, but I really like how it's acting. We had that initial gap up. This was, I forget what announcement this was, but 75% move, nice closing range on massive volume. You had follow through for a day, but quickly kind of pulled back and closed just slightly higher, up 1.5% that day. After that bar and after the 75% move recently, I was expecting more of a consolidation pullback, and we actually undercut the 21 EMA, build this nice tight pattern out about a week and a half ago, and then we started pushing through that on the 25th, but Monday kind of pulled back. This was down about 5% on Monday, I think. 3.4%, ending up 5% at the low. But we pop right back through that 8 and 21 EMA on Tuesday, consolidate the rest of the week above it. This is one that I'm looking at that round number 30 to hold on a down day in the market. Being a biotech stock, it shouldn't be as correlated with a market pullback. So the NASDAQ had a really nice run last week. If we have any consolidation there, I'm just looking for this to hold that $30 level, and then I can use the low of the day on Friday along with that 8 and 21 EMA right around 29.70 to get a really, really tight stop, about a 1% risk on that one. Next, we have CFLT, and while this might not look like a very strong stock, this is my bread and butter trading setup, the higher low 50 pop. I used it last week on stocks like Uber, where we pull back under the 50-day moving average, rally up into it the first time, pull back, have a tight consolidation, and then take off. BRZE was another stock that put in that higher low 50 that I started trading last week. So now I'm thinking CFLT, also starting that position, or starting that pattern out. Going to a weekly chart on this, you can see we did pop back over previous resistance, IPO base. Since then, we rallied up to 40, pulled back into that pivot. The low here was 30.49. We have that $30 pivot, so it's nice to see that buying support came in right around that level. And then we've been building under the 50-day moving average or the 10-week moving average for a couple weeks now. And what I like about that is if you're trading under the 50-week moving average, a lot of swing traders typically have those in their trading presets, in their screener presets, that the stock has to be above the 50-day moving average for them to trade. So I want to be getting in slightly below the 50-day moving average and using their secondary liquidity to get a nice day 2, day 3 rally where I can manage my risk against the 8 and 21 EMAs below that price. So with this one, we had that initial rally up to the 50-day. That typically fails, which it did. The second rally came up to the 50-day on Friday, squatted a little bit. Makes sense because the market came in a little bit on Friday. But a couple different ways you could play this is if we gap down on Tuesday, shortened trading week, if we take out the lows from Friday and then recapture those lows right at the 8 and 21 EMAs, that's one way that I would look to enter the stock, and then I can manage my risk against the low of the day, whatever day that is. And then you have your stop under the 50-day, under the 8, the 21, and a previous day's low. Very, very logical line in the sand for you to get out if the stock starts to break to the downside. And then the beauty of this setup is once it gets over the 50-day moving average and you're already in it, then it shows back up on every swing trader scans. And it's a stock that is moving from stage 1 to stage 2 in its IPO base. It's going to get a little bit more support or a little bit more interest. We also have the computer software database group, 12th out of 197 in the market. So it also has that group theme behind it. So while this doesn't look like the most pretty setup, it's one that I've studied, it's one that I build conviction on, and one that I trade all the time for CFLT. Next, we have Dell Technologies. Never thought I would put this on the watch list, but had earnings last week, last Friday. Earnings were up 4%, sales were down 13%, but really it's the reaction to the numbers that matter. And the reaction was massive, up 21% on 710% the average daily volume, closing in the upper half of its daily range, while the indexes closed lower in the range. This is one that if you go and really chart this up, there is a ton of unfilled gaps on the way up. So while everyone says Dell came out of nowhere, if you really go through and look for institutional accumulation where you have those unfilled gaps on the way up, you'll see about, I want to say 10 or 12 of those days along the way up until this base breakout. And going to a weekly chart, you can see we're now at all-time highs on this, which blue skies ahead. As swing traders, that's exactly what we're looking for. So a couple of different ways to play this one. Looking at the low of the pullback on that day 1, 67.17. If we can get in around that area, then we can manage our risk against the low of the day on Friday, right, or at $63. That's about a 6% risk if I'm doing that math in my head very quickly. Otherwise, just an HVC, this is the highest volume in over a year, so we could use the close from Friday, 68.19 as a potential entry point, and then manage your risk 3 to 5%, whatever you tend to do for DELL. Next, we have ESTC, and this is going back to that theme of stage 1 to stage 2 breakout stocks on earnings. This also had earnings on Friday, just like Dell, up 20%, nice closing range on, 505% the average daily volume. What I'm looking for in these gap ups, kind of like SPLK of a couple weeks ago, is you want to see a gap up right at that previous resistance level. So everyone that is short or has been short is now forced to really make a tough decision to cover. And when it starts covering, you have those nice clean rallies. So going back to ESTC, it's not as clean as SPLNK or SPLK, but you see multi-month base building out here. Previous resistance right at $75, 74, 78, and then a very nice gap up on above average volume. Earnings positive, sales positive, after-tax profit margins positive here. Also in that computer software database, again, 12th out of 197, so we have that group theme behind us. So this is one that I'll be looking to trade just as a HV1. So the close 74.27 is going to be important to me. Zooming in on a 15-minute candle, you could use the low of the day if we pull in, say we have a gap down on Tuesday in the market. Seeing how this responds to that 71.25 or even just the $71 level, and then keeping a tighter 2 to 3% risk versus getting in at that HVC, the close of Friday, and then managing your risk against the low. A little bit wider stop there. So two different areas to manage that risk. Looking for a stock moving like SPLK, moving from the stage 1 to stage 2 uptrend. And continuing on with that theme, we have GES. This is in retail apparel, 38th out of 197. Going to a weekly chart on here, you can see very similar to the other stocks. We're right at that previous resistance area. Also had earnings, 2 weeks ago. Nice move. Earnings up 85%, sales up 3%, after-tax profit margins improving as well. We gap up, consolidate, and then push through that $24 level. And then the rest of the week, Thursday, Friday, just consolidating above 24. Now, the leader in the group, ANF, this has been a monster. And just because it's a retail theme doesn't mean that we want to throw it away. I made that mistake on ELF when my girlfriend, now fiance, told me about it at about $40, saying, Nick, you don't understand. Everyone's using ELF. She started talking to me about ANF, Abercrombie & Fitch. So she bought that stock, and it's doing better than all the stocks that I own. So now just going into that theme, and then also the market kind of technical theme of stocks moving from stage 1 to stage 2. This is another stock that I want to put on my watch list. If we can hold the $24 on a down day or down week, that would be really important to me. Or even if we come back into the 8-day EMA, right around $23, you have the HVC level there. That was 2307, a good area to manage risk against. I don't love the idea of trading this on the top side just because we've had a strong rally in the market last week. I want to see, can this handle a down week in the market, really prove itself, not just riding off ANF and ELF, but really kind of showing its own strength there. So this is GES. The next stock that we have is IoT, and given how choppy this stock has been, I've actually traded it pretty well this year. But really what I want to talk about this in the stock is the weekly chart. You can see it's an IPO, put in a double bottom base, consolidates for about a quarter, and then has that gap up. Last earnings rallies right up to the turbulence zone before getting shaken out. Nice double bottom from there, and then we pop again on earnings. With this action, we actually gapped down to start the day, and then we had an expectation breaker. So if we gap down and the market's under some pressure, which it was on Friday, we would expect this to pull back into the 8, the 21, the 50-day moving average, and maybe consolidate there. But what actually happens is we gap down, immediately find buying support, and just rip higher, up 13% right into those previous highs. So with that expectation breaker, big volume coming in over the last 2 days, and now we're right at IPO highs. This is a stock that you have to have on a broader watch list. Maybe you don't trade it, but this is one that I'll be watching either on $30 on market pullback or just taking it with a break into new highs and managing my risk with a 3 or 5% stop there. But IPOs breaking into new highs, especially as the market kind of comes back up and is showing strength, not something that I want to play around with. This is a name that I want to really focus in on. I got 2 more stocks for you in this video. The next one is Upwork, another stock that gapped up on earnings, consolidated, showed relative strength while the market was correcting, and really looks ready to go now. So not the strongest group in the market. This is really just like an individual stock that I'm dealing with. But on earnings, we had a 350% earnings improvement year over year. Sales up 7%, not super strong there. But again, the reaction to the earnings was a move of 44% on 935% the average daily volume. Very strong closing range. And this is on a day where the indexes are correcting here, right? We're pulling back. We're breaking the 50-day moving average. And this tried to go day 2 through 15. But with that market correction, You don't want to over expect or have too high of expectations for individual stocks as the market's correcting. The fact that this pulled into the 8-day and then undercut it on Friday as the indexes were putting in their reversal extension, not bad at all. It always held the 21 EMA. And then you can see as that market pressure lifts, we go right through $15, pull back again, come into the 21 EMA. Again, we don't break the 21 EMA. Nice line in the sand for us to manage risk against. And then we tried breaking over 15 on Friday, closed just under it, 14.96. But you can see volatility is starting to contract here. We managed to hold over the 8-day EMA on those two moves. This is one where I wouldn't be too surprised if we do undercut the 8-day EMA on a correction in the market or a pullback consolidation. But what I'll be looking for is if we do kind of take out the 8-day, then reclaiming it is a potential entry point, and then to finish off that position at when you reclaim $15. So I want to put my initial position around 14.65 and really build into it on strength through 15 instead of putting on the entire position at 15. And then if we get any wavering in the market, getting stopped out with a full position. For upwork, another way is if we pull back and we really kind of correct in the market, see if we can get a position around this $14 area. Then you have the 21 EMA, something that we've had prior support for. And then you get a much tighter risk. Maybe you size up the entire thing there and then try to play for a bigger move. And finally, we have oil and gas as just an entire theme. So many oil and gas stocks were coming across my scans this weekend that I didn't want to pick from just one. So I just put the ETF XOP on there for you. If you want to look for a leveraged ETF, you have GUSH. This does 3 times what XOP does. Really nice run up through all the key moving averages over the last couple weeks. We spend about 3 weeks consolidating, pulling into the 21 EMA, bouncing there, but it's really the action on Friday. That gap up through 150, closing high in the daily range, up 2.5%. That really solidified oil and gas as a potential theme in the market that I want to focus on. So any pullback to 150, holding this gap area, that's an area where I would want to manage risk against the 8-day EMA or the lows from Friday. And because there's just so many individual stocks, I'll just be focusing on either XOP or GUSH to put my money in. So that's going to be the breakout watch list for the shortened trading week next week. I hope you guys enjoyed the video, and I'll see you in the next one.